Hi, I'm Amberly Mason, and in this edition of the 3-Minute Trading Expert series, I'm going to talk about short selling. This strategy allows traders to profit when stocks fall. It's the opposite of conventional stock buying, which allows traders to profit when stocks rise. In conventional stock buying, you try to buy low and sell high, but when you sell a stock short, you flip that equation around. You try to sell high and buy low. Here's how it works. Let's say there's a business that you believe is due for hard times. Maybe its latest product is terrible, or maybe a powerful new competitor is eating its lunch. You believe the value of that business is going to decline. In order to sell this stock short and place a bet that will allow you to profit as the stock falls, you borrow shares. You borrow these shares from institutions that have lots of stocks in their inventory. The fine details aren't important. Just know that many institutions are happy to loan out shares, and your broker can help you find shares to borrow. After you borrow these shares, you immediately sell those shares. You'll see the proceeds in your brokerage account. But remember, like most anything you borrow, you have to return it. In the case of short selling, you have to buy the shares back in order to return them. The goal for the short seller is to buy the shares back at a lower price and pocket the difference between the original sale price and the hopefully now lower price of the shares. For example, let's say there's a company that makes cell phones. We'll call it Acme Cell Phones. Its share price is currently $50. Now let's say that a competing phone maker, New Century Cell Phones, just came out with a new phone that makes Acme's phone look terrible by comparison. You see this, and it leads you to believe that Acme Cell Phones' earnings will decline, and so will its share price. You want to profit from that decline. So you go to your broker and borrow 200 shares of Acme. You then sell those shares for total proceeds of $10,000. 6 months later, you're proven right. Consumers are rejecting Acme's cell phones. New Century's phones are a big hit, Acme's sales plummet, and the stock drops from $50 to $20 per share. Now it's time to close your trade. It's time to buy the shares back for $20 each and have your broker return them to the institution that let you borrow them. You only have to spend $4,000 to buy the shares back, so you pocket the $6,000 difference, minus commissions. Just like any other type of trade, you'll want to use risk-limiting measures like stop losses when shorting stocks. If the stock you short rises instead of falls, you'll lose money. But when you're bearish on stocks, this is a useful tool in your trader toolbox. Instead of being able to profit just from rising stocks, short selling allows you to profit from falling stocks as well. I'm Amberly Mason. Thanks for watching, and good trading. If you want to learn another incredibly powerful trading secret, click here to watch the next video.